Hi everyone, this is Rusmin from Fifth Persons. At Fifth Person, we invest in great businesses, be it for dividends or capital gain. Okay, so my job here is to help retail investors to do the same so they can grow their wealth safely and consistently over time. Okay, so in this video, I'm going to answer 3 questions that are often being asked by retail investors on stock market investing. Okay, so the first question that I have here is, which is very commonly asked, is where do you get the source information on stocks buyback? Okay, so in Singapore, Malaysia, or in the US. Okay, so now to answer this question, where do you get this information? Of course, the first resource that I usually use in Singapore, if you are looking for share buybacks, either from directors or company share buyback, you can actually go to sgx.com. Okay, so SGX is the stock exchange of Singapore, and they have this column where you can actually navigate all the way through. It's called company announcement, and any companies that's listed in Singapore Stock Exchange, they may have to disclose whether the insiders, the directors, are buying back the share. Okay, insiders could be referring to substantial shareholders as well. Okay, so for Malaysia, of course, you can also go to Bursa Malaysia, where they also need to declare and announce to the public. Okay, and likewise for Hong Kong. Okay, so of course, there are typically a few resources that you can find, like in Singapore. Maybe you may look at some of the information providers. Of course, those are paid providers like shareinvestor.com. In Bursa Malaysia, you may also look at some of the publications like the Age Malaysia, okay, where they do have a page where they summarize company buying or directors buying and selling on a weekly basis. Okay, so in the US, you may actually look at some of the I have a few here. Okay, I just wanted to highlight 2 main one here. One is actually finvest, okay, .com, where they actually provide free information about insider buying and selling. The other one is actually this thing called Data Roma, okay, ROMA. Okay, so these are the 2 great resources where I personally use to find information about directors buying and selling. Okay, so that is the answer to the first question. And the second questions that I have is, how do you differentiate between noises from the actual news when it comes to stock selections? Okay, so noises are typically news that have no relationship with the fundamental of the company. Okay, so when I say noises, I'm referring to politics, hike of interest rate or fluctuation of interest rate, trade wars. Okay, so all these news, of course, they may do have some implication on how consumers are going to spend their money, but those are on the big picture. Okay, so you may want to focus on this micro level, where things that are actually more related to the company. Okay, so news that is going to affect the company's sales, and the bottom line, and as well as the cash flow. Okay, so just to give you an example, if I invest in REITs, okay, which I do, typically I will look at news that is related to the REITs, okay, like their shopper traffic on a year-to-year basis, or even on a quarter-to-quarter basis. I'll look at things that are going to affect my distribution per unit that the REIT is going to give out in the next quarter or next few years. Okay, and I also look out for announcement like, whether the REIT is going to acquire any big assets. Okay, because those are related to my investment. Okay, where else if we are talking about, let's say, trade wars? Okay, trade wars is not going to affect REITs for sure. Okay, of course it does affect the overall consumer sentiment. Okay, but that is again on the big picture level. Okay, so it's very, very generic. Okay, well, and the third question is, what to do with some legacy stock which are in the deep red, okay, and in the portfolio. Basically, these are the stocks that maybe perhaps you've been keeping it for years, and those companies still lost money in your portfolio. Maybe you're down like 30%, 50%, or even 70%. Okay, so of course those are companies that may have their fundamental has changed. Okay, you may want to revisit again why you buy into this particular company and why whether the thesis is still valid today. Okay, the chances are high that the company business has changed structurally into a not so good environment. Okay, and or maybe perhaps they've been disrupted. Okay, so if you have those companies in your portfolio that you do not know why you bought them in the first place, or their businesses has been disrupted structurally, you may want to cut losses on those companies, because if you don't cut losses, the losses is going to get bigger and bigger over time. If you look at the brighter side, you can take the amount of money that you have actually cut loss, and that money to proceed, you may actually reinvest it into great businesses, and that great business will help you to compound your money again, and you make back the money that you lost it in the stock. Okay, so you don't really have to make back the money the way you lost it. Okay, so if you lost in that particular stock, you don't have to hope that that particular stock come back up. Okay, you can actually sell a stock and then put the money onto a better stock that's going to compound your money. Okay, so that is my take when it comes to cutting losses. Okay, so that's my take. Okay, again, that's all I have for you in this video, and if you like the video, please feel free to share it with your friends. Okay, and if you have any questions about stock market investing, please type in the comment and let us know your question, and we may pick the best question and do it for our next video. Okay, so once again, this is Rusmin, and I will talk to you soon.